opportunity. One of the things that I find interesting is most, maybe many, but lots of people underperform long-term as investors because of one really simple idea, which is they fear volatility.
Yeah.
Right? They fear price fluctuation, and therefore they don't act. And by not acting, you stay too conservatively postured, and inflation chews up your return, and you get less rich. And what's really interesting about that is volatility is not a negative, right?
Mm-hmm.
It's not evil. What it is, it's a measure essentially of uncertainty about the future. So think about it. If you buy a bond, let's say you buy a T-bill, 90 days, with pretty good cert because they have higher volatility, but they're uncorrelated to bonds, the risk of my portfolio actually goes down. It's what Markowitz, won the Nobel Prize for. And when you add Bitcoin, which is highly volatile, but uncorrelated to bonds and uncorrelated to stocks, it's 0.0 correlated to bonds and 0.15 correlated to stocks, your whole portfolio volatility actually goes down. And no, that's not possible. What is. Now, that doesn't mean every day, every minute, but over the long term, if you add Bitcoin to a portfolio, your volatility overall goes down and your long-term compounding goes up. So that says, people are adding it, and now you're seeing this relentless accumulation.
Correct.
Institution modeling. And yes, some hedge funds are buying and hodling, and yes, some Bitcoin treasury companies are buying and hodling. But alongside of that maturation of the market or institutionalization of the market, you've had the development of other derivatives. So now we have futures and we have options. And when the financialization of a commodity, now this is one of the be careful what you ask for things. Remember the whole argument about, Bitcoin's not a security. And we love that they called it a commodity. Do you? Think about it. Why do you want it to be a commodity? Oh, because it's taxed better and then it won't be, crushed by the SEC. It'll tame Bitcoin. Like tame. Yeah. That's an interesting word, right? Why does it need to be tamed? And who are you to tame it? Well, if you go back to 2018, the price went from 10,000 to 20,000 in about 6 weeks post Thanksgiving into the second week of December. And then it crashed, right? We went in a big crash, and by middle of 2019, it was all the way down at 3,200, or end of 2019, down to 3,200. Well, interestingly, literally on the day, December 18th of the peak, the CME issued new futures of Bitcoin because they own
It's to cover their shorts.
No, they don't. They don't own 2 billion. They are short at least 2 billion, maybe even a little more sometimes, but mostly they're market neutral. But they're short in the futures market. So as the futures market has evolved, that volatility that should be going down, to your point, actually keeps rising. Now, at some point, we'll have good balance between the haves and the people that don't have to play by the rules, and the masses will be able to thwart some of the manipulation. But at the end of the day, markets do financialize.
Of decentralization and self-sovereignty, even though it has been a net positive.
Again, it's another great point. And yes, but no, in the sense that there's TradFi, traditional finance. There's DeFi, which is the future, decentralized finance. But in the middle, there's this thing, rocky road, called CeFi, centralized finance. And there's a process. So there are absolutely people who are all the way over here in DeFi. They are self-sovereign, be your own bank. They own their keys, their coins. They're on, a hard drive or whatever. I mean, I know a bunch ledger or whatever. And that's great. Now, we all know people lose their password, they lose their CD for like 400 years ago. It's ridiculous.
Yeah.
I mean, it's literally ridiculous that if I send money across international borders, I have to pay one of two banks because of a treaty from hundreds of years ago. That's ridiculous. I can send Bitcoin across borders instantaneously for free using Strike, or I could send you with a couple taps on my phone, Bitcoin, and it's peer-to-peer, no intermediary. Now, why does all this matter? Well, TradFi, $7 trillion of fees every year extracted from us, the owners of the wealth, for the safety, security, accounting, safekeeping, record keeping, transfer, all that stuff, which is good, and it's been good for 800 plus years. But now we have new tech daughter, 2 years old, will never have one of these.
Yeah.
Right? She'll never have a leather wallet. She'll never know what paper money is. She'll never drive a car either, right? She'll ride in the car, and the car will pay the charging station. She won't think about it. We get out of our car, we take a plastic card and we put it in a machine to make a payment.
Yeah.
Really?
It's very inefficient.
Come on. Yeah. And so all of that's going to go away. And so but it's a transition. It's not going to happen like a light switch. It's not going to happen overnight. And so, yes, young people who became educated on the technology and are comfortable with holding their keys and their coins are totally self-sovereign. Now, are they totally self-sovereign? Do they have 100% of their assets in Bitcoin? Probably not. Not very many. Yeah. I ask people all the time. They piss on me. They're like, "Oh, you're such a shit coiner." I'm like, "What? Something that has fluctuation?" Because I'm going to have to, it's kind of like savings versus spending. If I know I have to pay my bills at the end of the month, I don't leave that all in stocks.
Correct.
I just don't.
So
have
question.
Savings bucket, investing bucket, but I have a liquidity bucket to pay my bills.
So question around the volatility and not volatility, but around the infrastructure and stable coins.
Yeah.
Which is something I've been attracted to Ethereum as the world computer and becoming that financial layer of how we transact for a very long time now. One thing with the emergence of stable coins, and I bought into the Circle IPO, so I'm very happy, with what's going on with stable coins. But at the same time, what really gives me pause is when you have Secretary Besant and Lutnick and a lot of the guys saying, well, these stable coins are now going to be backed by T-bills.
Politicians who run the governments really kind of like the job because it's a really pretty relatively easy job.
Yeah.
The pay's not great, but the graft and corruption is really great.
Very good.
So you look at all these people go into these jobs pretty poor, but they come out super rich. Like you didn't make that on your salary. How'd you make
how that happens?
Insider trading, graft and corruption, payola, this and that. I mean, look, is it a surprise to anyone? We drop a bunch of bombs the other day, and the companies that sold those bombs happen to have major shareholders, made these nations around the world dependent on us by denominating their debt in dollars. So the dollar hegemony is the world reserve currency. And so this is where you call me the OMG, the old macro guy, right? Old and macro and a guy. All three things apply. And the thing about the macro piece is as a government finances deficit spending, it has to issue debt. And countries like Japan and European countries and the US, these Western democracies, they're really, really good at deficit spending.
Correct.
Well, what does that mean? That means
Elon failed. The debt just keeps going up. The big, beautiful bill wants to continue to escalate the deficit. And now they figured out where to silo the demand.
So it's like, remember when Trump said the first time, I'm going to drain the swamp.
Correct.
Like, no, you're not. You're going to keep the swamp just how it is. You're going to put your own alligators in. So fine, you're going to put friendly alligators in, but you're not going to drain the swamp because the swamp makes you rich. And the only reason to go into politics is to get rich. And so this idea that somehow we were going to cut spending, bullshit. It's good talk to get votes. But at the end of the day, it was theater, kabuki theater, and a big, beautiful bill. Well, what is that? But that makes Bitcoin worth more because it's
I was going to say,
a depreciating asset.
So to that point, Tom Lee, Kathy Wood, Jack Mallers, we see a lot of crazy price targets put on Bitcoin, 7 figures.
Yeah.
When looking at that, one thing that none of them seem to want to talk about is the implications on the greater society if Bitcoin is to reach a 7-figure price.
Yeah, that's the painful part.
Because just looking at it pragmatically, if Bitcoin hits a 7-figure price, that means that a cheeseburger is $50, potentially, or that the the US has gone the way of Argentina.
I paid $30 for a cheeseburger the other day. 50 is not out of the question at all. And look, the funny thing about that is the millionaires got a shack, and by 2035, it's a picture of a castle. And this one girl's whispering, "Can you believe he has a whole Bitcoin?"
Yeah.
And that's the difference, right? Back in 2009, you needed thousands, tens of thousands, maybe even hundreds of thousands of Bitcoin to buy a house. Today, that average house, 5 Bitcoin.
Yeah.
5. And that's pretty amazing. And in the future, a Bitcoin probably will buy you multiple homes.
Yeah.
Or maybe a very nice home. And so ultimately, Bitcoin is simply a measure of the fiat here in Durham. And there's a bartender who does these regularly. And, she had a chip jar. And she came over, it was kind of early in the night. And she's like, "What are you guys talking about?" "I'm talking about Bitcoin." She says, "Well, explain it to me." She says, "Well, last time you were here last month and you got paid tips, all that cash that you got. Today it's worth about, 3 or 4% less.
Yeah.
If we had tipped you in Bitcoin, it'd be worth about 10% more." I mean, literally her eyes, she's like,
so you tell,
I could work less hours. I could do more stuff. I could free up. And this is the cool part. What happens then is you free up, and this is Jimmy's, I'm stealing it from him.
Mm-hmm.
You free up the greatest power in the universe, which is human being, right? Deep sea.
Yeah.
Guys in China, you can't have these chips. Okay, we'll write some software that uses the input. We'll start with, these other LLMs, and we'll take the output, and then we'll use that as our base layer so we don't have to use as much compute.
But that's good because it forces innovation, which is what crypto's doing to the financial system.
Yeah. And so
completely.
all of innovation comes from resource constraints, right?
Correct.
When you have everything at your fingertips, unlimited money, but I don't understand who's putting money into companies at these crazy valuations with no prospect of them making
inserting ads and any sort of BS into the LLM, because it's a great workflow to be able to get in there, start prompting, and then just keep refining what you're doing and work in it. If they start clouding it with that, I will be the first person to pay for the ad-free model.
And also the thing I hate about search is you can pay to move your result.
Yes.
But that's
even if it's not the best.
It's the result that's getting paid. And what I want results, right? I don't want your...
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.